What's up, YouTube fam? Welcome back to the channel. I got a special announcement as we've been getting, by popular request, people have been asking for a community, a Discord, etc. I don't have one yet, but what I decided to do is I made a waitlist. So check out the description in the comments and I'll put the link there for the waitlist. So anyone who fills it out, basically what I'm going to do is the first 50 to 100 people I'm letting in for free. Obviously from there I'll shut the waitlist, shut the community, and then make it some sort of paid community. But for everyone who's been with me from the start, all of my day ones, at least the next 7 days, it's going to be free. So sign up to the waitlist. The link is in the description. Figured I'd get that out there now. Also, people have been commenting saying they wanted to see statements. Right now, obviously, I've done everything live on YouTube. I've posted every single trade, right? But I guess just for the people who are the non-believers, right, the people who want a little more proof or a little more skepticism, I decided to download the statement. Now, obviously, I couldn't just click download because it would have showed my address, right? So I had to download it beforehand and, scratch that all out, the address and the account number. But you'll see, since we started the challenge on November 6th, here you go, $20,000 deposit. I'm not going to sit here and slowly look at each trade. What I'll do is I'll slowly scroll. So people who, are skeptical and want to pause it and look at everything for themselves, I'll give you that opportunity to do that. But as you see, there was no deposits, no withdrawals, right? Exactly as advertised, right? We deposited 20,000. We started on November 6th, and here we are. Again, by the end of the month, we were at 23.1. Obviously, now we're in December. I'm not going to download the December statement, but from December 1st until now, we're at now 25.2. So that's that. I had to get that out of my system. Had to get that for all the people who wanted to see it. Now let's get to business, right? How did we make 5,000 in the last 40 days, and how you could too? Well, obviously, if you really want to see all of the plays we've taken over the last month, my recommendation would be, one, either go back, pause the video, look at the statement, or two, just go back and watch some of my old videos, right? But instead, what we'll do is we'll go into the plays we're taking this week and why we're taking them. So obviously we're in these two plays, and I basically covered, a little bit about them on the last video, but we'll go into it a little bit more. So IonQ is a quantum computer stock that's been red hot, right? Obviously you see it shooting. And there's just been tons of news around quantum computing lately. Just tons of good things. Obviously, AI, just everything in the tech space is booming right now, right? People are optimistic, and when people are optimistic, tech stuff tends to do well because innovation is, something that is welcomed more than shunned, like it's been over the last 4 years, right? So people predict that the next 4 years there's going to be a lot of innovation, especially with people like Elon Musk in cabinet and, helping our next president. So IonQ was just a stock that I felt comfortable at, right? And at the time, we saw this daily printing, right? And we saw a bullish engulfing coming. So I decided to sell puts with this $28 strike, right? So the way I look at it, right, is like I didn't have to buy it up here, right? I would only have to buy it if it fell below here, then I would have to buy it at 28, right? So that's the risk. That's how selling options works, but specifically selling puts. Now, the beautiful thing is since it started going up, right, those puts already started losing value, right? So if you'll see, and this is going to change tomorrow, but the position was up $288. We'll see what happens tomorrow, because obviously that's the other beautiful thing about selling options is you have this bad boy on your side, theta. So tomorrow, when the market opens, it should automatically lose 10 cents, depending on where it is, right? If it opens up, then it'll be losing a lot more, and that'll be that. So if you've watched, every video beforehand, you know that we've loved earnings plays, right? But we don't just love any earnings play, right? We look for things that, have good premiums, and we look for stocks that have had good news and been trending up, right? So the main play that's on our watch list for this week is going to be MU, right? Now you see MU is a stock that's been around for, look at this, right? It's been around since 1984. So it's like when you ask yourself, the risks, right? It's like there's people who are selling meme coins, or better yet, buying meme coins with tens of thousands of dollars that came out yesterday, hawk to like ridiculous. in this case, we're selling options on a stock that's been around since 1984. It's like, and it's up, right? Obviously, it's up tremendously over the last, 40 years. So it's like, the slow growth is power, right? Because every time when something grows slow, that's foundation. That shows it's not going to go back down, right? It's at 102. Is it ever going to go back down to the 1984 levels? Maybe, but not when we're playing 1 week expiration, right? Like if we look up MU market cap, $115 billion. It's more than any crypto you can think of, I think, except, I guess, Bitcoin, ETH, and I guess, maybe the few top ones, right? But it's huge, right? This isn't something that's going to just go bankrupt by Friday. Worst case, yes, the earnings report doesn't come out great. We take a loss, right? Best case, it does go good, and we can just get out by Wednesday. Now, if we look at Nike, right? Obviously, Nike has earnings this week as well. But the difference is like Nike, okay, yes, long term, it's very bullish, and it's been around again since 1980. But in the short term, it has been trending down, right? You see this? It does look like it's creating this little double bottom here, where MU is a little more bullish, right? This is more of just a retracement, where this is more of a full-on downtrend. And what's the difference between a retracement and a downtrend? When you look at it, right, it's kind of just one pullback, where if you look at it here, one pullback, 2, 3, so that's why I'm a little more hesitant to take Nike. I think if the MU play goes great, then maybe I'll close it on Thursday morning and then take Nike. The other stock that's on our watch list is Carnival Cruise Line, right? Now, if we look at Carnival, it may not be, honestly, another stock that's been around since the 80s. So, we have a good week in the sense of, these are trusted stocks, companies that we all know and have been around for, most of our lifetimes. I'm younger. I wasn't around in the 80s, so all of these stocks are older than me. Carnival looks like it's been cruising up, right? So we'll look at the premiums. Right, let's just take a look. And I think I did cover this in a video already, and I remember it looked good. So ideally, we do get something out of the MU play. It works out, and then we either take Nike and it works out, or we don't take Nike because it's after close, right? So since it's after close, we wouldn't be able to take both of these. So I do think Carnival is probably a better play. It's like if we could do one of these low ones, right? 23.5, 24. Obviously we're not going to get down here, but on the weekly, let's go on the daily. We take the 23.5 strike. We're right above the gap, which I don't even mind because worst case, yeah, it'll probably cover the gap. But I think this is a pretty solid, strike price to be targeting. And, if we look at how much money we'd make, I'd be honest, we probably wouldn't even want to do, we could do this one. We'd probably want to go out a little further, but let's see. I don't know. Truthfully, I don't know if this play is going to be worth it. We're going to have to discuss this as the week progresses. But I'm really just trying to give you guys, my thought process, right? Like all these other stocks, I might look into them. I might not. I looked into General Mills. It doesn't have good premiums. Arcat I've never even heard of. Lennar, I honestly have never heard of it, but I'll look into it as well. Let's see. Okay, so it's a good price. Yeah, listen. This could be worth it, but I think MU is a better bargain for the price, right? Like look at these premiums, right? At $1.50, $2.90. Save that number in your head. And if we go look at MU at 102, right? The closest in the money is $4.65, so double the price, right? So why would we target this stock when we can target this one? And that's a big part of option selling. That's a big part of why I've been able to get such large returns over the last 37 days is because I'm very selective with which stocks I'm playing, right? I'm looking for stocks that have high premiums, right? IonQ has had high premiums. ACHR has had high premiums. MSTX is some of the best premiums probably on the market, right? NVDX is solid. ANF we played for earnings. HIMS we haven't played yet but has great premiums. DocuSign we played earnings. So, we're looking for stocks that have volatility and news, right? Obviously, crypto mining stocks have great premiums at the moment. Where if we were to just play like a JetBlue, well, JetBlue is too cheap, but like let's just say not United Airlines, right? If we were to just play United Airlines with no current news right now, okay, it's really not even so bad. Like, honestly, I thought it would be worse. We'll make for our account size 270 this week, which, listen, isn't terrible, right? 4 weeks in the month, you can make $1,000 a month, and that just goes to show how great this game is, right? You can play a stock like United, where it's not that there's no risk, but virtually no risk, right? And you're not really gonna have much to worry about. The chance of you expiring in the money is gonna be very low, and you'll still collect close to $1,000 a month without risk. Now, obviously, right now we're getting out $1,000 a week, right? Since we started, we're in it 40 days and we've done 5,200. So yeah, we're doing about 1,000 every week. But 1,000 a month for a $20,000 account is still great money, right? Like, that's still, what is that, 5% a month, 10% a month, right? So, right now we're shooting for 20, and we're getting there. We're getting 15, 20, and we're doing it by being very selective, looking for the highest paying premiums, chasing volatility. It's kind of like a storm chaser, right? You ever see those shows where these guys see tornadoes and they drive towards it to film it? That's kind of like us with selling options, and it kind of combines the best of all worlds, right? Because if you just bought options, you're risking losing so much. If you just bought shares, there's a lot more risk. But when you're selling a put, right, you're putting your strike price here, 23.5. So if it dumps from 25 all the way to 23.5, that's 9% of losses that you just avoided, right? Because you don't have to buy unless it expires below here. So you're putting yourself at such an advantage, because if you think about it, right, let's just say it does fall, right, and it falls all the way down to your strike and then bounces and then hovers around, you're still collecting the full premium and you didn't lose a single dime, right? Now, let's say it does this. On one of these pullbacks, you're going to be able to get out for either a small profit or a gain, or a small loss or a break even. And the reason why you're going to want to do that, right, is because these strike prices are great indications of support and resistance, right? Like, the option chain is a very, very integral part of the market. So if it's hovering below your strike, you're probably going to want to just look for a way to get out instead of trying to collect the full amount, because chances are it's going to use it as support and then dump, right? If we look at Oracle, which was a play we did, look at this, right? So we took this play before earnings with the 182.5 strike, and it did exactly that, right? It dumped below. We got out right here because I didn't like the look of the fact that we were below the strike, but it was still offering us profit. That's the beautiful part. We got in this stock and it was at 190, right? It came all the way down to here and we still got out for profit. So it came down 7% from when we entered, and we still made money. So it just goes to show, when it comes to selling puts, you can make money if it goes up and make money if it goes down. And it's very different than trying to short it. Because if you tried to short, okay, in this case, yes, you might have made money, but there's so many stocks that we sold puts on during earnings where it shot up. And if you would have shorted, you would have gotten crushed. DocuSign's a great example. We sold puts right before earnings, the day before, blasted up. Our puts were worthless, so we made full profit that day. But if you would have bought puts, again, it was worthless, so you would have lost all your money. So it's like, we're playing a game where we're winning, whether it goes up or down or stays the same. Like, there's virtually nothing that can make us lose. The only thing that can make us lose is if it shoots down and continues down. But we all know the way the market moves with these big market cap stocks, especially, is it always going to retrace, right? So if it comes below the strike, chances are it'll at least retrace towards your strike. And that's when you'll have the chance to get out for either the small loss, the small win, or the break even. And that's exactly what we did on the Oracle play. We've done that on a couple other plays. I think we had a clean spark play. We did that for earnings, and it was the same thing. I remember our strike was 13.5. So if we go on a smaller time frame, right? So this was earnings, came below, came back above. We got out. Didn't take the full profit. We took, whatever it was, 200-300. But the point is that it came down from when we entered, right? Like, if we entered up here, it was down 15%. But then we got the chance to get out here. So instead of being down 10%, we actually got out for a profit. So it's like, you're not shorting, but you're still giving yourself the ability to make money when the market goes up or goes down. And I covered Clean Spark yesterday. It's like, now when you look at this chart, it looks like it's falling. And of course, since it's a crypto stock, you want to compare it to Bitcoin. When you see Bitcoin going up and you see this looking like it's going down, you want to stay away from it, right? You want relative strength in every stock that you choose, which is exactly why, something like Nike right now isn't so appealing, even though Nike is a very trustworthy company, right? Like, do I think Nike's going bankrupt? No. But over the immediate term, it does look like it's going down, right? And yes, it wouldn't be the end of the world to be stuck holding Nike stock, but you have to consider this. Part of the reason why we've gotten such good results, right, such big gains, is because we've been very quick to jump from stock to stock. If we were to sit in one stock for 6 months, that would defeat the purpose of what we're doing here, right? So if we get in a play like MU and it absolutely shoots down, yeah, we can hold the shares. But do I want to hold shares for 6 months to make my money back when I can make my money back in 2 weeks and then be off to the races, right? So it's very important to understand what you're doing. It's very important to have a plan. You don't need to plan too far ahead, right? Because in the end of the day, the market, it doesn't really care about your plan, right? So you have to plan accordingly and act accordingly to what you see in front of you. But it's good to have an idea of what you might do, right? Like me personally, I haven't been assigned yet since we started this challenge. If you've watched every video, I know some of you have been with me from the start. And that's why I want to give a free community to everyone who's been with me from the start. And then, we'll start charging everyone maybe in the new year. But the point is like we haven't gotten assigned once. So we haven't had to buy shares yet. We haven't had to hold stock yet. And listen, if it's up to me, I'd rather do that for the rest of my life. I'd rather collect put premiums for the rest of my life, collect income. Do I have other portfolios where, I'm holding? Yes. And I do believe everyone should. I don't think you should be 100% selling options, because days where it's super bullish, you could make more holding. So I think you need to be doing both. But for this portfolio, I do not mind holding shares forever. Obviously on certain stocks, maybe if it's super close to the strike and it's about to expire, maybe I'll let it expire so I can, sell covered calls the next week. But for the most part, I really do not mind just selling put premiums every single week, because the premiums are paying great. I mean, look at it. We're up 26% in 40 days. If we continue this path, we'll double this account from the starting point, right? We started at 20,000. We'll get to 140,000 in 2 months from now. We'll get to 100,000 in 6 to 10 months, and then from then on, it's like we'll be making 6 figures a year selling put premiums until we double that account a couple times. In 3 to 5 years, I could not put a single dime in this account and be at, $500 to $1 million. So yeah, I wouldn't mind doing that and just continuing selling puts forever. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to like, comment, and subscribe if you want to be one of the people who gets in our community for free. Make sure to fill out the form. It's in the description, the link, and I can't wait to open it and be able to communicate with you guys and see you all in there.